Ladies and gentlemen, today we're going to be talking about some cryptocurrency news. Some of this is breaking news stories right now, literally the past few hours. If you want to stay up to date on everything that's happening in the cryptocurrency space, if you want to hear fair and balanced commentary that's giving you the good and the bad as I see it, do me a favor, smash that like button, hit that subscribe button, and click that bell notification. My name is Crypto Wealth. I believe in cryptocurrency, I believe in this technology, and I believe we are here early. We are here first. This is the beginning of an economic revolution, and if you believe in the same, do me a favor and smash that like button. I love to talk about all things crypto. I love to commentate, give commentary, give tutorials. I love to talk about earning passive income with cryptocurrency so that we can grow our crypto bags as we begin to head to the moon. But my favorite way to earn crypto without a doubt is through passive income technology. If you want to learn how to earn passive income with cryptocurrency, go down into the description. Subscribe to our Crypto Passive Profits newsletter. It is totally free. Thank you for being here. Thank you so much for watching. Let's get into this. So I got 3 news stories I want to cover with you today. We're going to be talking about Bitcoin getting an ETF. Recently, there's been an SEC regulator that spoke out about it. It was covered on CNBC. We're going to be talking about that. Aave, decentralized protocol, is talking about creating a bit of a sandbox or an experimental product with institutional investors. This could be big for the crypto space, but I think that's something we need to be paying attention to as astute investors. Before we get started into that, I want to talk about what you see on the screen. This Aave will demand $70 million in Bitcoin after ransomware attack. I've got some thoughts on this. I want to share with you what I'm thinking about this, and I want to hear what your thoughts are. I'm a little bit skeptical. Skeptical is the wrong word. I've got questions here. Here's the first question. Can we just get into this? First of all, the elephant in the room. The U.S. as a nation, if these attacks are occurring the way that they are by this group, Aave, which coincidentally, this is the first time that their name has been brought up in a news story that I'm aware of. When they did the attack on the meat processing plant, they didn't mention the name. When they attacked the Colonial Pipeline, they didn't mention the name. Now all of a sudden, they're giving them a name. I wonder why the shift there, first of all. But they are saying that they demand $70 million in Bitcoin. Good or bad, no matter what's going on here, I promise you, news stories like this are going to be used over and over again. Crypto is bad because of ransomware attacks like this, because of terrorist attacks, because of money laundering. So they're going to use stories like this right here, and they'll specifically mention this story, I promise you. So just be on the lookout for that. Let's talk about this for a moment. If you read through this news story, I'll link all these news stories down below if you want to read through them yourself. First of all, $70 million. This is by far the largest hack. It's incredible. But if you come down here, they got $11 million from the meat processor JBS. A week later, the group targeted a major oil pipeline in the U.S., blocking supply to around 14 American states. Nevertheless, the FBI was able to recover the Bitcoin ransom within days of the $2.3 million payment. I've got so many questions right here. First of all, first things first, if you don't want to be tracked and you're smart enough to do a cybersecurity attack, why would you not ask for payment in something like Monero? That's the first question I have. The second question I have is, if you're smart enough to pull off a cyber attack like this, would you not be better at hiding your cryptocurrency? Now, Bitcoin, truthfully, it is a challenge to be able to hide Bitcoin. There's mixers or things you can do, but it's next to impossible. As long as you have someone with enough time and resources to do the tracking, they can track Bitcoin, where they go, where they end up at. The first question is, why did they not hide the Bitcoin better? The first question is, why did they not use a privacy coin like Monero? The second question is, why could they not hide it better? But here's the third question. How did the government recover Bitcoin? How did the government get access to private keys? Was there an exchange cooperating with them? And if so, which exchange? And maybe that's been covered in the news and I missed that part. I still find it interesting that an exchange did cooperate and gave over access to their private keys. And I wonder if the U.S. government had some sort of a warrant and how that went down. If they did not access these Bitcoin through an exchange, how did they get access to the private keys? I mean, that is something that is bugging me to no end. It just doesn't make sense to me. And they're just paying the ransom. We don't even pay ransom for human lives. But now they're paying ransom for software. I got questions on this news story. There's too many things here that aren't making sense. And my question is, okay, let's just say everything we see is fact. Okay, you're going to pay the $70 million, and then what? What's next? What are they attacking next? It's a bit wild for me. And here's another thing that is interesting to me. A lot of times these independent groups tend to go after the man, the Colonial Pipeline, the big companies. But this attack here, the $70 million attack here, actually hits small businesses. If you go through here, the software is really hitting like architectural firms, dental practices, plastic surgeons, libraries. This isn't like a large corporate structure. This isn't actually about demand. This is hitting small businesses. This is hitting like mainstream average people. Here's the question. It makes a good story to say, oh, Bitcoin is bad. It gives me questions. What are your thoughts? Let me hear it down in the comments. All right, let's go over here to Aave. So Aave is going to launch institutional lending markets this month. I think this is very interesting as well. I think this is good and bad. Ladies and gentlemen, one thing you'll know about me, if you watch my channel, I can always give the positive commentary, the negative commentary. I can let you know where I've got questions. I can tell you what gives me pause in the news story that I'm seeing. So right here, Aave launches institutional lending markets this month. If you go through this news story, you'll see that what they're going to do is they're going to do special institutional only sort of pools that are permission-based pools. This is not their normal decentralized protocol. These pools are going to be open to institutions. They're going to have to complete KYC AML. And the main reason they have to complete KYC AML is because in order for these institutions to make an investment, they have to invest in very compliant investments, for lack of better terms. Aave is basically clearing the path, making it easy for them to choose to dip their toe in the water into the decentralized finance ecosystem should they want to. Now, Aave said that the pools are going to be permissioned, meaning that Aave has to agree to allow them in, basically. But the pools are going to be governed in a decentralized way. I think this is interesting, and it's going to be neat to see how this actually plays out and if it's truly governed in a decentralized way. Are Aave token holders, the governance token, are they literally going to be able to make decisions about these investment pools that could affect investors? If that is the case, if that actually happens, I think it's going to be a neat experience. Think about it. Average Main Street people are making decisions as Aave holders to big finance and their investments in the pool. I don't know. We'll see how it works out, but I think that's very, very interesting. Next news story, I think this is the most positive news story for crypto, and that's the SEC regulator speaking out about Bitcoin ETFs. And I think it really shows a double standard. Those people that are not in cryptocurrency don't realize how much of a double standard exists for crypto. They don't sense. If you're not already a cryptocurrency investor, you don't really sense the pushback that exists, the unfair demonization of saying, oh, Bitcoin is bad. Oh, everybody wants to use everybody using Bitcoin is some sort of a criminal. We saw that news story last week where it was actually a politician who said if you use Bitcoin, you have to accept the fact that by proxy, you could be deemed a criminal. That was just nuts to even think that people say stuff like that. But the average person doesn't see how cryptocurrency is getting unfairly demonized or scrutinized, if you will. But this regulator, Pierce here, Hester Pierce, just hits the nail on the head. The SEC should have approved a Bitcoin ETF a long time ago, regulator Pierce says. The SEC Commissioner Hester Pierce said a Bitcoin ETF is overdue and argued that its prior rejection for such funds is a kind of a double standard. Not kind of a double standard, it is a double standard. For years, Wall Street's most powerful regulator has denied applications by the nation's exchanges and financial firms to list securities that track Bitcoin. With each passing day, the rationale that we have used in the past for not approving seems to grow weaker. So if you come down here, he says something that's really good. He said, the biggest, most often question that I get asked is when will the SEC approve a Bitcoin exchange-traded product? Commissioner Pierce said in an interview on CNBC on Thursday, I thought if we had applied our standards as we have applied them to other products, we would already have approved one or more of them, she said. With each passing day, the rationale that we've used in the past for not approving seems to grow weaker. The SEC applies a unique, heightened standard to filing related to digital assets, she wrote in 2020, and she has argued that the agency is asking exchanges and would-be ETF sponsors for assurances beyond what it asks for traditional equity-based products. In other words, double standard. People of a regulatory mindset, when they encounter something new like this, say, oh, wait a minute. The market for Bitcoin looks a bit different than the markets we were used to, Pierce said Thursday. Now, she added, the Bitcoin market looks more like an established market that has more participation from institutional and mainstream retail investors. So I think the markets have matured quite a bit, she said, or Pierce said. She goes on, or he goes on, whoever, I think it's a she, says right here, this is good. Perhaps her most pointed objection came in 2018 dissent when she argued the SEC should have approved an application filed by the Chicago Board of Exchanges to list trade shares of the Winklevoss Bitcoin Trust. By precluding the approval of cryptocurrency-based ETPs for the foreseeable future, the Commission is engaging in merit regulation. She wrote at the time, Bitcoin is a new phenomenon, and its long-term viability is uncertain. It may succeed, it may fail. The commission, however, is not well positioned to assess the likelihood of either outcome for Bitcoin or any other asset, meaning that they're not qualified, they're not capable to be able to predict the outcome of Bitcoin or any other asset. It's not their job. It's not what they're supposed to do. That's what she's saying. She's saying that the commission is engaging in merit regulation, meaning that it's favoritism. They're trying to say, oh, we don't like this product, but we don't have a real reason not to actually like the product. I think this is a great news story. I think this is incredibly encouraging for Bitcoin and its price in the short term. Now, when I say all this, let me just tell you the negative. I don't think we necessarily need an ETF. I don't think we should have to have an ETF. You can invest in Bitcoin directly. If I can invest in Bitcoin directly, you can invest in Bitcoin directly. Regulators and financial advisors and anybody that wants to can invest in Bitcoin. And the problem with ETFs is that it allows mainstream finance another way to make a commission, to make fees off of cryptocurrency, which by its very definition should be decentralized. Fees should be very obvious and very transparent. But when you create an FTF, there's so many fees that are involved that people that aren't always transparent to the investor. I mean, they are transparent, but it's kind of like terms and services oftentimes. You know, who reads the terms and services on every website you ever go to, every place you ever put in your email? Most people don't. When you create an ETF, it's the same sort of thing. There's all these fees buried into that. Everybody's getting a cut. And, you know, the banks that create it and manage it and put it together, the brokers that are selling the ETFs are getting a cut. And it's just not necessary. I think for the spirit of cryptocurrency, it truly does go against the spirit of what we have here. But purely from price, not financial advice, purely from price speculation, I think it's good news that we're seeing this. And I believe we're going to see a sizable bump in the price of Bitcoin once we get an ETF. And I do believe it's only a matter of time before we actually get an ETF. But just think about that for a moment. Think about the number of people that have applied to create a Bitcoin ETF. When they finally approve it, this is the problem with the regulators. They're picking winners and losers. The Winklevoss twins, at the very least, have been early pioneers in this space. If anyone was going to get a ETF approved, I believe it should have been the Winklevoss twins. Not that I'm a fan of those guys, but they believe in this space. They're true crypto entrepreneurs. All these other ETF creators are primarily opportunists. And now you're in a situation where a regulating body, individuals who the majority of them don't understand the technology, don't use it, aren't early adopters of the technology, but they get to make decisions about it. This is a problem with government regulations in general, ladies and gentlemen, and it's why I'm always a fan of lower or less regulations in most cases. Today we've talked about Aave launching their institutional pools. We've talked about Bitcoin ETF and this regulator speaking out. I think it's a great news story. This one was my favorite, but the story that I've got most questions about is this demand for 70 million in Bitcoin. I've got so many questions about these cyber attacks. I'd love to hear what you have to say down in the comments. Leave a comment. I try to reply to almost all of my comments. Thank you so much for watching. Decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.